Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock, and we are going to be smashing some myths regarding their stock-based compensation. Then we're going to move on to see how their stock-based compensation actually impacts their investors, what the stock price is going to be in the next 3, 5, and 10 years, what analysts are currently thinking about Palantir as a company, and then lastly, we're going to compare Palantir Technologies versus another company, which will be Splunk. So we're going to determine which one is a better buy. So for more videos like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and then before this video starts, I want to tell you that Webull is offering people an amazing deal right now. So Webull is a brokerage platform like Robinhood where you can buy and sell stocks as well as cryptocurrencies, and right now, if you go and sign up for Webull through the link listed and linked in the description box, if you invest $100 into your Webull account after you sign up, you're going to be receiving 6 free stocks, and you're going to be entered in to win $12,000. So literally, not only are they giving you free money in the form of free stocks, you could also invest that $100 into ticker symbol VOO, which is an ETF that tracks the S&P 500. So not only is this money going to be relatively safe, and you are going to make money by receiving 6 free stocks, you're also going to be entered in to win $12,000. So if that sounds great to you, remember to go and click that link in the description box down below, but without further ado, let's jump right into today's stories. So the PLTR stock currently trades for around $8.68 per share, while analysts have a $6 12-month price target on the low end and a $25 price prediction on the high end pertaining to the next 12 months. But let's jump into this article to see what this particular author has to say about Palantir Technologies stock-based compensation. If you didn't know, Palantir Technologies is a big data and analytics company that serves both commercial clients as well as government enterprises, and their SBC, also known as stock-based compensation, has been a huge talking point for bears and naysayers when it comes to Palantir Technologies as a whole. I also want to point out that Palantir, on a generally accepted accounting principles earnings basis, also known as a GAAP basis, has been pretty negative, even though they do bring in positive EPS on an adjusted basis, which is why their EPS or earnings per share is actually positive. However, that does not mean they are profitable on a generally accepted accounting principles basis. It's on an adjusted earnings basis. Now, what I like about this author is that he currently has a hold rating on the PLTR stock, so this means that we're getting somewhat of a neutral view on Palantir Technologies. He's not necessarily a bear, and he's also not a bull, both of which could fudge the numbers, but I like how we're going to receive an honest valuation of Palantir's stock-based compensation. So to start off, the author says that Palantir's SBC program is actually used to achieve positive cash flows. He also says that Palantir's employees who believe in the company are willing to accept stock instead of an increase in extra salary, and this in turn is helping Palantir Technologies internally by a large margin. This also helps Palantir Technologies attract and maintain top talent because it allows Palantir to pay their engineers more than any other company could possibly pay them. So not only does it maintain talent, but it also attracts talent to this phenomenal company. However, there is a double-edged sword here in the form of stock-based compensation, which is going to keep GAAP profits or generally accepted accounting principles profits at bay. So to put this into perspective, let's say that Palantir Technologies completely stops their stock-based compensation. Literally, they would become profitable on a GAAP basis overnight, bringing in loads of profits. However, because Palantir is a company that is looking well into the future over the next 5 to 10 years, they do not want to do that at this time. They are going to wait and attract more talent to hopefully bolster their revenues, and in the future they are slowly going to teeter off their SBC program. I also want to point out that there are different forms and mediums that stock-based compensation can take. For instance, there's immediate stock grants, there are stock options, and there are stock options when an employee hits certain performance targets. And for Palantir Technologies, they mostly use the stock options to reward employees. We also know that from an SEC filing that Palantir has registered around 101.3 million shares at the start of the first quarter, which means at today's prices, that's going to be worth around $850 million. And Palantir says they are going to use this to grant their employees extra income in the form of stock-based compensation over the next 3 years. which means that GAAP profits are most likely not going to come over the next 3 years. However, I still stand by that Palantir is going to become profitable at the end of 2025 because that's what the current financial projections are saying. And once Palantir as a company becomes profitable, I think their PLTR stock is going to start gaining major momentum. So if you're willing to hold the company until 2025, preferably the end of 2025, this may be a good long-term holding opportunity for you depending on your average cost basis. Because if your cost basis is too high, such as over $20 or even $15, it might not be wise to hold on to the company for that long, but this comes down to the individual and how long they are willing to hold the company. For me personally, I'm holding this company for the long term, but this company makes up less than 5% of my portfolio, so I can easily hold it for the long term. Another thing that investors make a mistake about is their cash flow from operations, which is growing at an astonishing 31%, and that is absolutely amazing. For instance, this year they're supposed to bring in around $252 million worth of cash flow from operation. The next year they're going to do $330 million, the year after is $432 million, and then lastly in year 3 they're going to bring in around $566 million. So this is an overall fantastic growth rate. However, we have to remember to actually account and discount this based off of their stock-based compensation. So for this year, it's actually going to be negative at a loss of around $31 million, and then next year we're going to have a positive cash flow from operations of around $47 million, and then in year 2 it's going to jump dramatically to $149 million, and then it's going to jump dramatically again to around $283 million. So overall, that is extremely positive. So we need to keep in mind that we need to reduce the cash flow from operations from their SBC. So this begs the question, what should the current stock price be trading at? Well, according to various DCF models that use FCF, which is free cash flow, and even traditional cash flow, this is how the numbers have come in. For the fair value of the PLTR stock price using cash flow and free cash flow, we get estimates anywhere from $5.91 to $13.58, and these are 12-month fair value price targets. In a previous video, I actually showed you us calculating the fair value price, and we ended up at around a $10.32 price target for the next 12 months. And honestly, I think that is pretty good because it still provides us upside from investing or having an average cost basis from the stock's current price right now, which is around $8.68. So overall, this is pretty positive if we take this fact into consideration. However, it begs the question, what does their stock-based compensation mean for you? And does it mean that we should sell the stock while it's low? Well, first I want to quote directly from this Motley Fool article, which says that Palantir software requires very skilled employees to build and maintain these solutions for its customers. So human talent is arguably the most crucial resource. Companies fiercely compete for high-end talent, so Palantir must compensate its people well or risk losing them to other companies. The passage goes on to say that stock-based compensation is a non-cash expense. The chart below shows how Palantir generates free cash flow, but the bottom line profits, which is net income, are still negative due to the sizable stock-based compensation awards. End quote. So this is just reflecting about what we previously said, how Palantir is remaining competitive compared to their competition within the industry, and this allows Palantir not only to steal talent from other companies, but maintain talent by offering their employees a high salary through stock-based compensation. Also, this does hurt their overall profitability, but once they teeter off or even stop their stock-based compensation, they are going to be profitable on a GAAP basis literally overnight. So it really just depends when the company will actually do this and pull the plug on their SBC program. Naturally, this is going to act as a phenomenal catalyst which could ignite the PLTR stock price. However, we don't know when this is going to be, but I don't think it's going to be in the next 3 to 5 years. Mainly because the management of this company has a very long-term mindset of building this company and growing it in the near term so it can be a successful company in the long term. So if you are not willing to hold this company for the long term, this is probably not the stock for you. Management is thinking that if the company continues to thrive by maintaining their current talent and increasing their revenues, that eventually their PLTR stock price and their share price will follow suit. And I honestly respect that they do have a very long-term mindset when it comes to this particular company. I also want to point out that investors can actually see how they are lowering their stock-based compensation quarter over quarter, and it's steadily trending downward. And this should actually make investors feel very good. So if we look at this chart, you can see that stock-based compensation quarter by quarter was increasing. It spiked, then it decreased, it stabilized, and then from July of 2021, it has been downtrending pretty consistently, and I think that downtrend is going to continue onward for the next couple of years. And of course, the effect of this is it's going to push Palantir more toward profitability, which is why the current financial projections say that the company is going to be profitable on a GAAP basis in the year of 2025. So although stock-based compensation is a necessary evil in the short term, over the long term, this could actually provide really good cushion for the company for both maintaining their current talent and also slowly pushing them toward profitability as they lower it over time. Now, this begs the question, what about Palantir when we compare them to other companies such as Splunk? Well, Splunk is currently trading at around $102 per share, while the analysts on the bearish negative end say it's worth $98, and the bullish analysts say it's worth at least $200 over the long term. However, if you're new to this, you might not know what Splunk actually does. So this article is not only going to tell you what Splunk does as a company, but it's going to compare and contrast Palantir to Splunk. So, as you know, we don't really need to review Palantir Technologies. You already know what Palantir Technologies does, especially if you watch this channel, and I constantly have updates on Palantir Technologies because this is what you all want to see. However, if you want to see stock updates and analysis videos on other companies, feel free to comment those down below, and the one with the most likes I will do a video on. But now let's talk about Splunk. So Splunk, ticker symbol SPLK, is an infrastructure software business that has various applications and tools, most of which are actually used by Fortune 500 companies. And they, in essence, allow IT professionals to watch their system and what's going on through their network and the software that is running through their network. So basically, it gives them a good bird's eye view. So why buy Splunk right now? Well, we also know that the stock is trading at around 7 times their revenues. So if we compare their market capitalization to their revenue, they're only trading at around 7 times their TTM revenues. And they're also trading on around 35 times their free cash flows. So regarding their revenues, ideally we would want to find companies that are below a 10 times multiple, and Splunk fits that criteria. So that's very good when it comes to their revenues. However, if we look on and we jump over to Palantir Technologies, Palantir Technologies trades at around 9.4 their TTM revenue. So if we're comparing their market capitalization to the current stock price, even though it is below 10, it's not as good as Splunk. I also want to say that on a free cash flow basis, they're trading at around 106 times their cash flow. So in both instances, regarding revenue and free cash flow, pertaining to their current market capitalization, Splunk is actually the better stock. However, this does not mean that they are a better company, and let me explain why. This is going to come down to which company has the better fundamentals. The SPLK stock is set to reach a range between $140 to $200 in the next 12 months. And they have a very strong addressable market and good revenue opportunities. However, when we compare that to Palantir, Palantir has a far better long-term business model, and that's why I personally like Palantir Technologies. Now, I do want to say that I personally own both of these companies. However, I think the SPLK stock from Splunk is a better short-term investment, while Palantir's PLTR stock is a better long-term investment. So, if you want to hold for the next 2 to 3 years, Splunk is going to be your stock because it could give you around a 40 to 60% return during that particular time frame. However, if you're willing to hold for the next decade, then Palantir Technologies is going to be the stock for you. So with that in mind, I would love to hear your thoughts down below. Comment what you think about Palantir, Splunk, and which one you personally like better. Subscribe if you're new, smash that like button, and I'll see you in the next YT video.